Welcome everyone to your market watch today. Today is February 16th, 2018. And you know what? These markets are performing exactly as I expected them to perform. If you've been watching my show for the past 2 weeks during the market crash and everything, it's just I predicted the turn in the markets exactly when they would occur, and it's following right on par from what I expected. And so what we're looking at here is first I'm going to start the charts right here, and what first thing we're going to look at is sweet light crude oil, $61.12. So even though it's showing as down a little bit, it's up from yesterday. It's moving back up into the 60s again, which is actually good for crude prices. Now, we're going to take a look at something that's really important right now, and that's the bonds and rates, because this is what I've been actually going by to understand what the market's going to do. It's following these bonds and rates, and they're right on cue from what I expected. The trouble's going to come when this U.S. 10-year rate right here, this one, the U.S. 10-year, I'll highlight it for you. When that goes over 3%, that's when we're going to start to get into the problem area again. Now today, the price of the U.S. 10-year has actually fell back. When I say the price, I'm talking about the yield. The yields fell back a little bit to 2.86. It was 2.91 the other day. And this is good. This is supportive of the stock market, the rally that's going on back up again with the Dow Jones. Now I'm waiting for the Dow Jones to come online. It should come online in about 4 more minutes. So I'm kind of showing you some other things first. Let's take a look at the silver price while we wait. The silver price right now is at $16.73. Anything below 17 is really, really good right now. It's down 9 cents on the day, but it's traveling in a very narrow range up here for the last few days, in around 16.90, 16.73 today. But silver has really been going nowhere for ages. The price, it's been staying here in this range. It's been range bound between, say, 16.70 and 17.20, in around that area for ages now. It'll bounce down a little bit, and it'll come back up again, then bounce down a little bit. That's because it's awfully close to mining production costs. Silver is a terrific value right now. It's a real safe bet. It's a real safe hedge against fiat currencies, simply put. So now let's take a look at the cryptocurrency market while we wait. Bitcoin, we're going to go to Bitstamp, and we see Bitcoin price is at 99.84. So it's been slowly gathering steam, slowly moving upwards. I expect this trend to continue for a little period of time. I personally, my opinion is, I don't think that Bitcoin's a real good buy right now. And I'll tell you why. I think it's going to continue upwards slowly, like it has been doing, up until March, the end of March. And then when April comes, stock market's going to crash. I'm thinking sometime in April. But what might happen is they might be able to have another crash like we just had, and then they might be able to recover from it and price it in again. But they'll only go 3 months until the next time the Fed raises and does steeper reverse quantitative easing. What they're doing is they're raising the bar every time, the Fed is. $10 billion every 3 months they're raising it by. And what happened is they raised the bar in October, November, and December. They had it at $10 billion. And then they increased it. The end of January, it became effective. We only went 1 week into that with the newer 20 billion. I'm raising it from 10 billion to 20 billion. And that little market correction that we had was caused by that, because of the effect it had on interest rates. When they raise that bar again at the end of March, is when they're going to raise that bar again. They're going to raise it from 20 billion to 30 billion. That's going to have an effect on the interest rates again. You're going to find that rates are going to rise. And what the effect is going to be is on the stock market. The stock market right now has priced this in, but it's only going to remain priced in until it gets up to around 3.25% on the 10-year. And then we're going to have a sudden jolt again. This is going to keep happening, this cycle, almost like wash, rinse, repeat. And until we get a crash out of this. And they're going to keep pushing this until they get a crash. They're not going to. The Fed's not going to stop until they get the crash. And this is what's going to send everything into hilter-skelter. Now, if we take a look at the Dow Jones, has it started yet? No, it hasn't started, and it's 10:31. We must be almost on the time for it to go. So we'll take a look at a couple other things. The dollar index, 89. So the dollar is down a little bit, but on the day it's up. But it is down a little bit. It was running around 90. Now it's 89. So we're kind of waiting on this Dow Jones Industrial Average. So what I'll talk about for a minute then, I'll talk about Peter Schiff. And I was listening to him this morning, and I taped a little excerpt of it that I'm going to play. Well, we'll do the Dow Jones from what it is right now. It closed at 25,200, right? That's 306 points up. So I'm expecting the day to start. There we go. There, she just started. She's down 2.39, okay? Which is nothing. It's almost like unchanged. But here's the thing. So we got the Dow done. Let's see. Yeah, we've covered everything. Okay? So let's talk about Peter Schiff. I recorded a little excerpt from the show of Peter Schiff. It's audio only. And Peter Schiff is basically talking about the exact thing that I'm talking about here. He uses his own words to describe exactly what I'm expecting to happen. How the dollar is actually going to be destroyed when the Fed comes in and tries to improve the situation that they are creating right now. The situation that they are creating right now involves everything around them selling their toxic balance book. And this is raising interest rates. And as these interest rates are going up, it's having a shock effect on the stock market. They're only going to be able to go so far with this before they're going to have to reverse direction. And when they actually do decide to reverse direction on all of this, they're going to turn the entire flow of money around in the opposite direction. It was trying to go that way anyway. But before they started selling their toxic balance book, them raising interest rates wasn't enough to hold it back. That's what they've been doing, is selling their toxic balance book, and they're going to increase with this. They will increase all the way up to $50 billion a month. They have that planned. They've only increased to $20 billion a month so far, and you see what it's done to the stock market? But the stock market was able to price that in. But when they go to $30 billion in March, the end of March, into April, we're going to be running at $30 billion a month. Then they're only going to go with that for 3 months. If there's no crash or anything, if everything stays good, they will increase it to $40 billion 3 months later. And then they'll increase it to $50 billion 3 months after that. I mean, they're just going to keep going with this until they bring everything down. And when they bring everything down, then they're going to have to go back to some sort of monetary stimulus. This is obvious, and this is obvious to Peter Schiff. Peter Schiff, in his words, I'm going to get him to say basically the same thing, but he's saying it in his own words. And I'm in total agreement with what he has to say. And this ultimately is going to be the demise of the dollar in the end. And we're coming right around to this. This is coming fast. It's only a month or two away now at this point. I know everybody has waited for so long. They think that it's never going to get here. A lot of you have studied this, and you understand what I'm talking about completely. You know that this situation is going to end in tragedy for the dollar. But the question is when? Well, the timing now is we're almost on top of it. So now listen to Peter Schiff, and we'll catch you guys in the next report tomorrow. Bye-bye for now.
Up. And big increase in consumer prices, big increases in interest rates, and that's going to prick this bubble. But the scary part is going to be the reaction that the Fed has, because the Fed is going to react almost routine. The economy is weakening, unemployment is picking up, the markets are falling, we got to go back to QE. We got to cut rates, and we got to do more QE. Well, the market is not expecting that. The market has been bracing for more rate hikes and for quantitative tightening. Yet despite all this, the dollar is falling, gold is rising, commodities are rising, but when the Fed has to do an about face, then that's it. The bottom's going to drop out of the dollar because people are going to realize that they've been lied to.